Hi, I'm Managing Director Jeff Lowe of Asian Sky Group and Asian Sky Media here in Hong Kong. I'm joining you as part of CGI Global 2020 and here to give you an update on the Asia Pacific fleet and market conditions currently. For those of you who are not too familiar with the region, just to give you some context, the Asia Pacific fleet represents about 5% of the business jet fleet or the business aviation fleet worldwide. We're about 1,200 aircraft out here, whereas the global market's around 22,000. And also, just again, gives you some context, our biggest market is China, which has about 332 jets. Van Nuys Airport in California, and I often use this as an example, has 675 aircraft based at it, GA airplanes as well, and about a third of that's jets. So again, just to give you some idea of not necessarily the downside that we have here in Asia, but the upside. Tremendous opportunities out here in Asia, and certainly those opportunities are not going to go away, but they certainly represent great potential for the future here in Asia Pacific. The first set of numbers I'm going to present to you come from our business jet fleet report that we issued in April of this year. You can find that publication online at www.ASIANSKYMEDIA.com. It was released in April, and it shows you that the fleet at the end of 2019 in the Asia Pacific region was 1,213 aircraft. This represented a growth of just 11 airplanes from 2018. So the region barely squeaked out a 1% growth for the year. This represented unfortunately, a fifth year in a row declining growth. So again, the region has not been performing particularly well over the last 5 years, but the compound growth over that period of time was 2.6. Looking forward, and certainly with COVID-19, 2020 is not going to be an improvement. So certainly we're forecasting for those contractions, or that contraction that we've seen over the last 5 years to continue, but actually potentially for the market here in Asia Pacific to go negative. So we have that in front of us. Where that growth came in 2019, primarily from Southeast Asia and primarily from Australia. Greater China, that had always been in the past the engine of growth, it has stalled out and now is in recession, if you will. It is contracting and did last year and did again this year with a significant loss of airplanes, most of those coming from mainland China as well. How we get those net 11 airplanes, 45 new aircraft deliveries, which is down from last year, 50 pre-owned additions, again down from the previous year, and a total of 84 deductions. So 95 plus, 84 minus, with a net then growth of 11. As a side note here, and just as another reference to the region, there's not a lot of activity going on inter-APAC. As you can see, only 11 aircraft moved within the region in 2019. So again, any recovery in the region is going to have to come from international markets. The majority of the airplanes that move in the region do so into the US market and then the European market. So any recovery in this region is going to depend really on the recovery that happens elsewhere. So there's very much a wait and see attitude here to see what happens and plays out in other parts of the world regarding the Asia Pacific fleet. Of those 45 new aircraft delivery that came into the region, another significant point to note is there was a tremendous decrease in value as well. We saw over the last 2 years, when you look at new aircraft deliveries, a reduction of value of $671 million. But 2019 was propped up by a couple of wide-body deliveries. So if I take those out of the numbers, over the last 2 years, the value of new aircraft deliveries has dropped almost 50%. So a loss of $1.3 billion. Pre-owned aircraft, similar trend, unfortunately, dropping from 178 down to 120. And again, tremendous loss in value when you look at those aircraft and their prices that they're transacting at. So you saw almost another $1 billion come out of the market through the loss of pre-owned transactions. The net result for that is when I refer to the market now, whereas before it was a $5 billion plus market, it's now a $3 billion market. So significant changes there. Who are the big winners out in the Asia Pacific region? Not too surprisingly, it's Bombardier and Gulfstream. I think most of you know the Asia Pacific region is a large cabin, long range market, and so for those two manufacturers to fare well, it's not too much of a surprise. They had good years in 2019, both of them experiencing high single-digit growth. So when you look at top models for delivery, top models for pre-owned, and what left the region, probably not too surprising then to see the G650 remains the market leader, followed by the Falcon 2000 and Global 6000. Pre-owned leader being the 550. And then when you look at deductions, you're seeing 7Xs coming out and 550s and 450s. But I think the 450s are getting replaced by the 550 pre-owns. And then the 550s are getting replaced by the 650s. So there is a moving up the chain of the family of Gulfstream that's taking place, and you're seeing that played out through these numbers. So that kind of takes us to the end of 2019. The next set of data comes from our Asian Sky quarterly edition that came out at the end of the first quarter. For us, COVID-19 was a January 1st, 2020 event for us. So by the end of the first quarter, we had already lived through 3 months of it, and probably the worst 3 months. Not too surprisingly then, when you look at the optimism or confidence in the region, at the end of the first quarter, it had dropped off a cliff. And most of the numbers that we're seeing are the lowest they have ever been. And as we all know in our industry, when you lose confidence or optimism of where the future is and what it holds, your purchase intention likewise tends to diminish. So when it comes to looking at what the intent people may have to buy aircraft, we still have half the market undecided, not sure whether they're going to buy or not. But also we're seeing another trend where if they are going to buy, that's increasingly more in the direction of a pre-owned aircraft. So as a side note here, the challenge for the OEMs going forward is going to be even more than for the pre-owned side of the business. As you saw earlier, there's more and more, or sorry, I should say, less and less new aircraft being delivered into the region of lower value. And the inclination that people have is to not buy new, it's to buy pre-owned. So certainly the reductions that the OEMs are going through as far as production rates and workforce and everything else, I agree it's going to be a longer road to recovery for them, because we will not see that the demand return for new aircraft purchase as quickly as we'll see for pre-owned transactions. The next set of data comes from our Asian Sky Quarterly magazine that's due to be released in a couple of weeks or next week. This again looks further into the market and in particular the impacts of COVID-19 through the region. When you look at flight activity specifically, you can see here the numbers from January through May. So you're seeing a tremendous drop-off in activity, 85% in the market. And then when you look specifically at major hubs throughout the region, again, you're seeing significant drops in the number of departures. Beijing, for instance, we're almost 200 a day, dropping down to just 3. And likewise, Singapore, triple digits down to a single-digit 5. So again, in the region, significant declines in flight activity. You're seeing confidence and optimism, significant declines in the region as well. And so when people aren't flying, they have no confidence. Not too surprisingly, we're seeing more and more airplanes on the market now here in the Asia-Pacific region. So more airplanes on the market that are taking longer to sell. Most of those buyers are sitting on the fence at the moment. They're unsure of what's going to happen over the 6 months. So they're all taking a wait-and-see attitude. So airplanes are sitting on the market longer. Not too surprisingly then, to try to stimulate any interest, the sellers are starting to drop prices. So definitely it's a buyer's market again, but it's one that's kind of hung up at the moment as we wait and see what happens around the rest of the world regarding COVID-19. So for the next 6 months, we certainly see lots of opportunities. Business activity levels for us is certainly up, but you eventually get to that point where people just sort of say, look, I need to wait and see what happens elsewhere. And so certainly the hope is, because we are seeing positive signs of recovery occurring in other markets, certainly in the U.S. market, that will trickle down, and we will see those business opportunities that we have at the moment coming to fruition, and the market will recover through the next 6 months. We really won't see any improvement in the numbers as far as the data that I've presented for until next year. But the hope is through the last 6 months that this business will pick up again, and hopefully we can end the note on a positive one. Then hopefully that'll continue, and 2021 we'll see good progress. So that's the state of affairs here in the Asia-Pacific regions. If you have any questions, I'm happy to answer those. Thank you and good day.